So there's only three things you need to know for this week, at least for the S&P 500. One, until we can get above 548.36 roughly, this correction slash pullback is not over. So bulls need to get above this level. There are a variety of reasons for this. One, we are now within a bear pennant. So in order to get out of this bear pennant, we do need to break above, which nicely converges with my level already, which is the previous low that formed before we had this very brief upside move and then the immediate downside afterwards. So that's the first thing I wanted to let you guys know right out the gate. So I definitely would mark this level on your charts, especially with FOMC approaching this week. Secondly, this trend line right here, extremely critical. It is good, at least for bulls, that they were able to hold it as of last week. So the weekly was able to hold above, but this trend line goes all the way back to where the low from October of 2023 was. If you remember that correction that we had last year, and you can see it's been respected numerous times in its lifespan and just recently was retested. So again, it is good to see that bulls are able to defend this. However, with FOMC, like I said, approaching this week, this is very important that it holds again because FOMC can bring excess volatility. And it seems like, as you can see with these orders over here, that some whales are expecting excess volatility. And the reason why I say that is because of this order right here. This is a long strangle strategy, which essentially means that they expect a lot of volatility. You don't just take two opposing bets, which in this case is them taking out the money call and then a at the money put, unless you expect it to go in either direction in a very fast and aggressive manner. Otherwise, they would take a huge loss based on the premium that they bought both of these for. Since remember, if you're using a strangle strategy, your max loss is the premium that you bought it for in case we were to, let's say, just chop around in this range. So they're taking a pretty big bet here that volatility, at least within the next week, because this is only about an 8/16 expiration for August. So they're expecting a pretty substantial move into FOMC. And they also are predicting, at least this is what they're telling us by reading a print like this, they're expecting FOMC to be underpriced. So they expect a surprise to occur to a degree, and they think volatility is underpriced going into the event. So very interesting print here. This differs from another print that we saw last week. I can't remember what day it was, but we can check here for all of last week. It was on SPXW because this was very different. This was a lot. It's right here. This was a lot of put sell orders, which are betting that we're going to stay pretty contained at least until July 31st, which is this week. This is different though, and this is why context is important. So listen to this. These are very short dated, so they expire this week. Because of that, they're betting that we're going to stay pretty much range bound where we are right now on the S&P 500 over here until they expire on July 31st, and they would be able to collect the premium. These were sold to open. They were rolling the July 26th expiration from before. They rolled those to the 31st. You could see here they sold below the bid. Quite a bit of premium. These are pretty hefty prints, all things considered, 30 million and 23 million. And they rolled it because they expect volatility to remain subdued and drop. That is going into the end of July here. So they're taking profits essentially on the premium that they sold these into, which is heightened because the implied volatility is heightened. So in this case here, they're expecting it to stay dormant, at least volatility just around this area, and drop at that. So that's their bet going into July 31st. After July 31st, however, it seems like, just based on those prints that I just showed you for the S&P 500, it seems like something like this. They're betting that there's going to be a vol explosion or just the opposite direction for upside. They expect it to be very aggressive to the upside. So they don't quite know what direction it's going to be, but they know it's probably going to happen with FOMC or right after. So they're just taking a bet in either direction, and they get paid as long as there's an aggressive move in either direction. So that's important to note. Again, context is key here because those July 31st ones are very short dated. So it's a short amount of time span versus these, which are about 2 to 3 weeks out from when they added them. So that's the second point that I wanted to mention in today's video here. And then the last point that I wanted to mention is what happens if bulls are unable to reclaim 548.36 this week or anytime soon, especially with the amount of dark pool premium that we saw last week. Like if we look over here, $544 million worth for this singular dark pool print. 380 million, 541. These are pretty big prints, guys. If you're unfamiliar with dark pools, anything over 300 is definitely something unusual. SPY, maybe not as much. Anything over 500 million, even for SPY, especially for a singular dark pool print, is certainly something you want to keep an eye on, especially if they're back to back to back like we saw here. So quite a bit of prints last week. that tells me move is going to happen here soon, at least a large move, not just any move, because of course moves can happen at any point in the market, but a large move is expected whenever you see this much of premium hitting the tape in the dark pools. So with that, like I said, if we're unable to get above here for bulls in a short period of time, above 548.36, then we have to be careful of some serious downside from here, which at the moment I'm going to remain unbiased until we can have some type of confirmation below the trend line I just showed you guys from the October 2023 bottom, as long as we stay in between the top here, which I just referenced, the 548.36 level. We're kind of in no man's land right now. If we can get under this, there's a pretty high potential this gap fills. If this gap fills, we're going to see some more downside for sure on the S&P 500. That means a very critical trend line that has remained intact for, let's say, 9 months now. That would mean that trend line broke. So we're going to see some type of large scale downside move if that happens. And that means that bulls were also unable to reclaim that level that I just referenced here, 548. Plus we have a lot of dark pool prints to back that. And on top of that, volatility is pretty high considering it is July right now. Typically seasonality is supportive of lower vol going into the end of the summer, like around July time. Typically around, August, it does pick up, but July is very uncommon for volatility to be this high. So super uncommon to see that, first of all. So it could be something new that's approaching. But again, this trend line here, super critical for bulls to hold this week, especially with FOMC. If it does break something like this, if it breaks, you do see some downside. And I am still in the camp that this is going to be a viable dip for this correction. Even if this does break and we see some more downside to like 530, or it goes back to the previous highs from over here before the correction in April and May of this year, that'd be around the 520 mids. Even if that happens, I'm still in the camp that there will be a dip to buy. However, that is quite a way away from where we are right now if this did break. So that's why I'm watching it very closely this week, especially with this bear pennant here on the 15-minute chart. So a lot of things to watch for this week. Very important week ahead, especially with that FOMC approaching and rate cuts kind of on the horizon here. We'll get a glimpse into what the Fed is thinking right now, especially for the rest of the year. So very fun times ahead because volatility will be high, as that means opportunity, but opportunity goes both ways. It can both mean risk as well as reward. So make sure to manage your risk appropriately as always, and watch both of these levels, this trend line right here, and then my 548.36 level, because that is going to tell us where the market wants to go.